Good morning, everybody. This is Mark, and we're back here for the morning call, and it is Friday, Summer Friday. So it will be a little brief today. So what are we seeing? We're getting into the thick of earnings season. We've obviously had a mixed bag. For the most part, earnings haven't been so great, but the stocks are reacting to the upside across the board. This morning, you have a little bit of a contrast in that you have some stocks that have been leaders, market leaders, that quite frankly are losing their luster, losing their shine, and some have really just broken key support and they're in a void at this point in time. So let's take it to the S&Ps first. We have the market overall. We're down a little bit this morning. I would like to see us hold roughly around we might not hold the 8-day moving average, but I'd like to see us hold the 21-day, which is around 135.40. And if we hold the 8-day, it's around 136.50. I'm not surprised to see a down open. We've had a good 5-day run stretch, and you need some digestion in there across the board. And we're still not seeing the leadership we really want to see in industry groups overall. You could say maybe the ags are leading at this point in time. But overall, tech is a mixed bag, but still things look good. It's just a matter of this digestion is healthy. Let's get on to the earnings and what we were looking at. So yesterday, there was a few good, solid trades I think people should be recognizing. I said it earlier, earnings. When it's earnings season, especially in this type of tape, follow the volume, follow the earnings plays. That's where you're going to make your money, minimum on a short-term basis. And there's going to be volume behind it, which means the move will be a little bit more real and make a lot more sense. So FFIV was a good trade yesterday. We were talking about it. Down $3 most of the day, most of the morning, and then you can just see, by 11 o'clock, with a little patience, just started moving, went green, and obviously went up, about $3 to $4. All the other clouds, VMW, did it the previous day, and had some follow through also. So clouds look like at this point they need a rest, but trying to find a little bit of a bottom overall. This morning we had Google last night. It's right at 610. It didn't really give you a whole lot of juice after hours. 625 I think it was at for a second. A lot of times Google does not give you a whole lot of intraday moves after earnings the day after. So maybe it pops to 600, maybe it pops to 615. I don't expect a whole lot of massive action. I wasn't very excited with the earnings, but we'll have to wait and see what happens. I'm not gung-ho either way. Two leaders that, quite frankly, you got to keep an eye on, but at the same time have lost a little bit of luster. ISRG, I still think is in the game. 520, I know it's down, I think 25 points, 27 points. Look at that, the previous level, roughly around 500 as some support. That's harder support. And then we have a 521. I don't think it's below there yet. It might be. But for this stock to hold. And again, you can see the weekly chart just so you can see a little back and forth. It's healthy, but you don't really want to see it close below the 21-day moving average on a weekly chart for any extended period of time. It could mean that more selling is due. Then the other one, I'm not calling it dead, but I'm definitely calling it going to be out of the spotlight for a while. CMG down $75 when I first came in here. It's actually down $20 more than when I left around 6 o'clock last night, which is pretty surprising. You normally see a stock, it broke the 200-day moving average. We were talking about it at 372. When I left, it was 360, and now this morning it's 325. $30 more, $40 more, whatever it is. Look at your weekly chart. So we can see where there's any support whatsoever. Now, it has broken key moving averages. It broke the 21-day, it broke the 8-day, and with some authority, 200-day is next, obviously at 239. I'm not sure it gets there. But first line of defense, roughly around 317. That goes back to 2012, December 2012 lows. And then after that, you're talking 300. So those are the two levels I'm looking at. I think it's trade only. If it rallies, you might get a short. If it pulls back a little bit more, maybe there's an opportunity. I think it's a trade only at this point in time. Long term, technically what I'm looking at, it's broken. It's going to need more time for sure. A few other plays I want to just go over. SanDisk up on decent earnings. It's above that level. It is in that gap as of this morning, 38.29. Possibly it begins to fill that gap, and that would be roughly around 40. So, maybe there's another $2 of juice back left in the stock. We'll have to wait and see. If it plays the same way like eBay and Swix and some of these other stocks that have gapped up, or even Qualcomm for that matter, they don't do a whole lot. They didn't do a whole lot after earnings yesterday. So to me, that's just telling me we got to be a little bit more cautious, sit back a little bit, especially with the down opening. It's for us to recognize. The ag sector, still the strongest sector at this point in time, but 3 day, this is now the second day down, and this would be the third day down in some of the stocks. MOS, you could probably buy MOS close to its 8-day moving average, 56.53. I know people have been looking at CF. I really haven't traded it. Gets back down to around 199. In that area, I'd like to see it hold, but probably a chance to take a dip. Second day down, maybe you want to see one more day down with leadership, but something to recognize. Banks not really looking at, not exciting at this point in time, but just put a chart up. Since earnings, Goldman Sachs has done nothing but sell, hit resistance at 100. And at this point, it's back in its range, means it's a non-event. JP Morgan, same type of trade. Still hanging below its 200-day. It's beginning to wedge. I was talking about yesterday in the morning call. If it gets above 36.70 with some authority, with some volume, then I might get a little bit more aggressive. Until that point, it's just going to get a tighter range. And for us, that's just an avoid and a watch. Other ideas that I'm looking at, retail had another good day. It was a little bit more selective, but you had Ralph Lauren, which I talked about, which was in, unfortunately, the day before. So I made some money, but, the big move yesterday above the 200-day moving average, which I'd like to see. And even, Under Armour, another up day. Nike, a decent day. Lulu had a decent day trying to repair itself. But Lulu is still below its 200-day moving average. I'd like to see it recapture its 200-day for me to say, you know what, try to find a base roughly around the 200-day for it to move higher. It's still just bouncing. It didn't break the descending channel quite yet. It's close. That might mean it moves to the upside a little bit more. But again, this is what I'm looking at. You got to dissect the tape accordingly. And earnings, that's really what it comes down to. So this morning my focus is going to be, certainly I'm going to watch Google. I'm going to watch SanDisk. I certainly will watch Microsoft, which actually came out. And I think, and I said this yesterday, Microsoft, it seems, this is a daily chart, anywhere around 30, it seems like a safe buy for Microsoft regardless. And at some point, it feels like it's going to make that move to 33 and for new highs. I don't know if we're there yet. Doesn't seem like it, but something to recognize. So when I'm saying, these clouds 2-3 days up, or some of these stocks 2-3 days down, to me, we get right back to the range. So 2-3 days up, I'm certainly not going to stay long. And I possibly might put on some light shorts just to come back to levels that they've been at really for a period of time. And that's where I think we're at. So with the market doing this, 5 days up, 6 days up, a down day was in the cards, is expected, and it's something for us to recognize and really just not necessarily react, but respect. And this range-bound action, we're still in this ascending channel, which goes back, 2 months at this point in time. That's where we live. And so we're getting to, as you get to the top end of the channel, most likely you're going to get some selling pressure that works our way to the bottom end of the channel, and vice versa. So until we maneuver out of that range, it's status quo as normal, and that's the key. Oil stocks had 2-day run, 3-day run. Possibly a dip might be in the cards. PXD looks decent, but 3 days run, 4-day run in EOG, which we were talking about, right to the 200-day, that's where I would be taking some profits if you haven't already. And possibly, I don't personally put on the shorts, but, I know for cash flow trades you could put on the shorts. It's not my game. You got to stick to what you're good at and go from there. Yesterday, just to wrap up, yesterday Amazon had a good showing, and I think that's important to recognize. Amazon's coming out with earnings. I believe it's next week. Apple's coming out with earnings next week. Broke above that level. It's on the radar. Maybe it tests 620 before that level, and that would be a trigger buy before earnings. We'll have to wait and see how that works out. But overall, I'm not expecting big, tremendous, directional moves. in the market, I think it's about more stock selection. IPO front, we had 5 yesterday. We have Kayak this morning and Palo Alto. Keep an eye on them. They're supposedly hot IPOs, and it's something we can sort of we can definitely take advantage of from a cash flow point of view. So overall, guys, it's Friday, summer. It's been a busy week, and I think it's going to be busy next week. So pick and choose your ideas. I've mentioned a few stocks that I think should be on the radar. Earnings, earnings, earnings. Find the stocks that have volume attached to it, and that's where you're going to make your money. That's the sweet spot. Good luck today, and I'll see you back on Monday.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.